Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, let's start off by talking about some of the trades that you've got open for the portfolio, and the first of which is Sasol. And I know you had a few questions about it, so perhaps let's revisit the trade, see how it's going, and talk about some of the questions that you've had on it, because there were some specific technical issues that maybe people didn't grasp.
Yeah, that's right. Yeah, so let's quickly have a look at the trade, why we did it, and then we'll have a look at some of those more intricate technical aspects. I've got the chart of Sasol up on the screen at the moment, and what you can see here is that we had this well-defined upward trend that goes back to March. In fact, it goes back further than that, but it joins all the lows since March quite nicely. We also had this lateral area of support, which comes in at around about 610 Rand per share. Over the last 6 weeks or so, the share's been consolidating and pulling back, and basically it's pulled all the way back to that support, the uptrend support that I showed you there, and also that lateral support level as well. And last week I identified that this share was breaking out to the top side through that consolidation, and to me that justified a buy signal, and we're now looking for the share price to move up to 650 Rand. That's our target. So we went long, we bought 360 CFDs at 627 Rand, and we're using a stop loss here of 613 Rand. Now, it got out the gates beautifully, and it has pulled back since then, and you can see we've had a bit of a pullback and a retest. For now, that's still fine in my mind. I think that the 650 Rand target could still be justified, so we're going to stick with the trade as we had intended to do. Just not forgetting, of course, that Sasol is my nemesis stock. And we spoke about that on the show last week, so you never know, it could turn around and bite me. But for the time being,
stay positive, Garth.
Absolutely, we're always positive. For the time being, we're going to stick with this trade. It still looks fine to me. Technically, that setup is still great. And in fact, if you didn't buy it the first time around on that breakout, it's actually probably giving you a second bite of the cherry now to get involved at the same sort of area where we bought it, and you could put a similar stop loss in place. But now when it comes to the technical aspects, and there's been a bit of confusion over the last week, and I've been contacted by a couple of people asking me, how is it that I've managed to buy 360 CFDs for 5,055 Rand? Now let's explain where this all comes from. What I've got on the screen now is the technical aspects of the trade that we always look at. So we went in, we bought at 627 Rand, we've got a stop loss at 613. Risk per share is the difference between where we go into the trade and where our stop loss would trigger. So the difference is 14 Rand. So that means we effectively got 14 Rand per share as risk open on this trade. Now, I always talk about the position size and the risk as a percentage of our capital that we've got available to us. And in this case, I elected to risk 1.5% of our trading capital. Now, we had 337,000 Rand of trading capital in our account. So what I'm saying is that I'm willing to lose 1.5% of our capital if this trade doesn't work. If the stop loss gets hit, I'm willing to lose 1.5% of our money. And 1.5% of our money in this case works out at 5,055 Rand. That's 1.5% of our total capital of 337,000 Rand. Now what we always do then is we take the position, or the capital risk rather, and we divide that by the risk per share, and that gives us a number of how many shares we can afford to buy. And then, so it was 361 shares in this case, which I then rounded down to 360 CFDs just to make it a nice round number. Now, a lot of people have said to me, how can you be buying 360 shares or 360 CFDs for 5,000 Rand? It just doesn't make sense. I mean, 5,000 Rand would only really allow you to buy about 8 shares of Sasol if you were buying the physical share. We're trading CFDs here, contracts for difference, so it's a derivative instrument. You don't have to put up the full value of the transaction. You only put up what's called margin, which is around about 10% of the value of the transaction. So what I want to do here is just try and explain the difference between the two, because it seems where the confusion is coming in is that people are getting confused between the risk and the exposure. And what I want to say is that the risk is what we potentially stand to lose on this trade if the stop loss gets hit. That's how much money we will lose. 360 CFDs is worth, in terms of exposure, a hell of a lot more. It's actually worth, you take the value, 627 Rand per share, times that by 360 shares. It's the exposure that we're talking about here is 225,000 Rand. That's the total exposure that we've got. And then in order to take that exposure, we're doing it through a CFD. So we put up margin, which it varies from, depending on which CFD provider you're using. But give or take 10% is usually the common figure in terms of what deposit you would put down as a margin. And so it's 10% of the exposure that we put up as margin. So 10% of our exposure works out at 22,572 Rand there. So I hope that clears it up. There does seem to have been some confusion between what is risk and what is exposure. And I think people just need to understand the difference between the two. And this is how we size our positions every week on the show. We base it off the amount of money we're willing to lose if our stop loss gets hit.
And maybe for those who don't often watch the show, 1.5% to 2% is generally the size of the position that you would take as far as the overall portfolio is concerned. Because as you can see there, your exposure can get vast if you're taking bigger positions.
Yeah, that's right. Well, 225,000 Rand exposure. Look, if the share price of Sasol was to go to naught suddenly, we'd lose 225,000 Rand. That's not going to happen, obviously. But we want to protect ourselves, in the event that the share price moves below our stop loss. We want to say to ourselves, well, what's our risk tolerance? How much money are we willing to lose in the pursuit of trying to make a profit out of this?
And I know, and you've said it before on the show, but also just a reminder that your risk, I suppose your risk control is extremely important, is as important as anything else as far as trading is concerned.
Very much so, and it comes back to the point about discipline as well. Discipline, stop losses, risk management, correct position sizing, all of those things are incredibly important in trading. If you've ever heard of someone or a story of a disaster in trading, it's always because something's gone wrong in the risk management department. And that's why we hammer home that point so hard on this show every single week, because that is really where you will either be successful or unsuccessful as a trader. It's in your risk management at the end of the day.
And also whether or not there's a degree of luck involved, especially if you have a nemesis stock as Sasol is for you. Garth, what about Naspers? What's going on there? Because that is also another open position that you have in the portfolio at the moment.
Yes, that's right. We still have an open position here, but something interesting happened during the last week, and I'm going to talk about that now. Really what we saw here, first of all, we've got the stock trending up over the last 3 months or so. There's this big overhead resistance area at 1,350 Rand. The stock had pulled back a little bit recently, and we bought into it. We bought 165 CFDs for our portfolio at 1,300 Rand, and a stop loss there at 1,270 Rand. And my feeling is that we're seeing some consolidation at the moment, but the likelihood is that we're going to see the share price move back up and revisit that 1,350 level again, and quite possibly break through that level, I think. But as an intermediate target, we're looking at 1,350. But now, interestingly, over the last week, we actually did see that stop loss level breached slightly. And I want to talk about that because we didn't execute the stop loss here. And I want to explain why. We saw a misdeal happen on Naspers last week on Thursday. Now, this chart that I've shown you on the screen here is a 15-minute graph of Naspers looking back at the trading action since the 22nd of July. So you can see every 15 minutes, you get a candlestick plotting made here. Now, notice what happened there last week, Thursday. We had this massive big spike to the downside, and that is a mistrade.
So in other words, a fat finger, someone's typed in the wrong
it's a fat finger. What I suspect probably happened here, maybe, is that someone wanted to sell a number of shares. I don't know how many. It must have been a fair size, and probably wanted to sell them at around about 1,300 Rand. And perhaps forgot to put the extra naught on. So they tried to sell a whole vast number of shares at 130 Rand per share, for example. Now what happens then is that order will be filled all the way, it'll hit all the bids all the way down as far as it can until that volume has been executed. And that's why you saw this share price trade down so aggressively. Now the JSE does have certain
some mechanisms.
Mechanisms in place in order to mitigate this sort of thing. And what happened in this case, what did happen was that the stock went into an intraday volatility auction, where it goes for a couple of minutes. It's in an auction similar to either the opening auction or the closing auction at the end of the day, but it happens intraday for a period of usually 5 or 10 minutes or so. And then what happens is that all the bids and offers match off, and the share price will then resume normal continuous trading again. Sometimes these misdeals are reversed, sometimes they're not. The quantum of a loss has to exceed a certain amount, and the percentage of movement in the share price has to be beyond a certain amount. The JSE have rules around that. The point here that I want to make, though, is that our stop loss on this share was 1,270 Rand. But I've made the point on this show a number of times that I don't use automatic stop losses. And this is one of the reasons why I don't like using automatic stop losses. Because if you had an automatic stop loss here, that stop loss would have been hit and you would have been out of the trade unnecessarily.
Yeah.
Because for all intents and purposes, that share price should never have traded at that level. It wasn't even close. But yet, on a fat finger or a misdeal, it did trade down there. So for me, I don't use automatic stop losses, but the thing is I also have the luxury of being in front of a screen all day. If you are a person who is trading but you don't have the luxury of sitting in front of the screen and watching the market closely, you've got a job or you're out on the road or whatever, then unfortunately you need to have automatic stop losses in place to protect you whilst you're not able to watch the market.
But then you would be stopped out, so you wouldn't, the JSE wouldn't necessarily reverse the trade if you had an automatic stop loss, so it's just too bad.
Yeah, it's too bad, it's tough. Then you just got to suck it up.
Oh, it's a cruel game. But Garth, realistically, how often does this happen? Not often.
No, not very often. You'll see these things once a month, twice a month, maybe, on a stock here and there. When it happens in a case like this, if you happen to be in the stock that's the subject of a mistrade,
well, too bad.
It's too bad, it's unlucky, and you move on. It's one of those things in trading, and it's one of those sort of unquantifiable risks, I guess you could say.
Yeah. So Garth, but you're still in Naspers and you're
Yes.
still happy to hold on to the position?
Yeah, I'm still in because I saw this, the fact that it was a mistrade. I saw the share going into a volatility auction. I said, all right, well, clearly this trade, the fact that the share price traded down to 1,262, it's not actually a real trade, if you like. I'm not executing the stop loss. I'm sticking with the trade. So we still are in it.
Okay. Garth, we don't have very much time to talk about the top 40, but I know you want to have a look at it because I also want to ask you about gaps, and maybe at some point we can talk about how you deal with a stock or an index when it gaps down or gaps up. And Naspers often does that. In fact, we looked at that chart, when you enter the trade, but maybe we'll leave that for another discussion.
Yeah, let's talk about that on another show, yeah.
So what do you reckon is happening out there on the top 40? Because we do have, I suppose, a trades which would profit on a bit of a pullback, but we're not seeing anything yet.
No, we're not. Look, we're in an options position. If the market was to pull back, we'd make money on it. But at this stage, it certainly doesn't look like the market's wanting to pull back yet anyway. I mean, you could almost be forgiven for feeling like you've got altitude sickness at these levels. The market just continues to grind higher and higher. And what we've seen over the last month or so, throughout July actually, is quite a nice, neat triangle pattern that's been forming on our market, on the top 40 here. And what you can see there are 5 quite clearly identifiable waves within this triangle structure. And what we're now expecting is the potential of a 5th wave breakout. Usually a textbook triangle pattern will break out on the 5th wave. And if that is the case, then, and we need to see the market trading convincingly above 47,000 here. Above 47,000 then validates that triangle structure, and that'll open up a target of about 48,500.
Wow.
So it looks to me at this stage like we are probably going to break to the upside, and we're going to have another leg higher on our market. Remember, these triangles can break either way, but around about 2/3 of the time they'll break in the direction of the trend, which means that in this case we're expecting the higher probability to be a break to the upside.
Yeah. Okay, so something to watch out, possibly a long position on the top 40. Garth, what does the portfolio look like? Not much change, I would imagine.
Yeah, it's similar. I mean, we're slightly up from last week. We've got 338,000 Rand in our account now. You can see our open trades there. Sasol is flat for us at the moment. Naspers, we're up. PSG, we're still in a trade there, and we're up nicely. So yeah, 35% up for the year to date. I'm quite happy with the positions that we've got open at the moment, and we'll be watching that top 40 trade for the week ahead.
Okay, great. We have to leave there. Garth, thanks as always for coming into the show. That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.